Let me ask you about your earnings, what you've reported. It looks as if it was slightly better than had been anticipated. What are the positive drivers behind these numbers?
Yeah, it's slightly better. I mean, we had an amazing year in terms of our pension risk transfer business and our annuity business, which did 10 billion of volumes last year, which is, more than double long-term historic trends. And we're seeing that as a bigger growth opportunity going forward. And Elgin became the first £1 trillion asset manager here in the UK, and that was an amazing achievement. So we're very happy that the operating profit from the divisions was up 12%, group operating profit was up 10%, delivered a 22% return on equity, and dividends and earnings per share both grew by 7%. So very strong financial numbers.
Nigel, I've got an RBC Capital Markets note here, and they say, although it's not a consensus view, 2018 is expected to have been the worst year for deaths this millennium. Explain to me what that means to Legal & General and your bottom line.
Yeah, I mean, it's a very sad outcome in one sense. We've all underestimated the rate at which people are dying, and there are all sorts of trends that are causing that. We originally thought it was a blip, but actually it's turned into a trend, that actually the assumptions were wrong that we were using for the rate of improvement. And it's meaning that we can make these very big releases. This year was 433 million, last year was 332 million. And we're using 2016 tables at the moment, but actually we haven't seen the 2018 tables, but we've seen the data, which means we've got further releases to come in future years. The good news, however, is that we're reinvesting those proceeds to help drive economic growth, largely here in the UK, in towns and cities and new businesses, and that will create real jobs, real wage increases. So in this sort of rather sad outcome is resulting in a positive outcome for economic growth.
Nigel, can I ask a question? Can I ask a question about Legal & General Investment Management? There have been some talk in the press in the UK, allegations of trouble in the culture at LGIM. I know that you pushed back against that. We've seen some management change, though. You've recently hired Michelle Scrimgeour as the CEO. What do you think that she can bring to the business? What's her secret?
No, I think this is a long-planned move that Mark would step down, having done an amazing job and working very closely with me over the last 7 or 8 years. And Michelle will bring some different skills. She's very strong in operations, very strong in risk. And we've positioned the business with lots of opportunities for growth here in the UK, very importantly in the United States, but also in Asia. And so she's going to join a business that had 40-odd billion of net inflows last year. Very confident that we'll perform strongly again in 2019. So we're definitely heading forward at a tremendous rate. And she'll bring renewed energy to help drive the growth, and a vast variety of skills across the whole of fund management, not just including fund management, but also operation risk and risk management skills across the group.
You have the biggest investment management business by assets under management in the UK. And of course, a lot of what you do, a lot of how you invest is fundamentally tied to UK growth. How does Brexit affect that? Are you set up for it, even for a hard Brexit, Nigel?
Yep. Yeah, we're set up for it. We've had very long-term planning. Our regulator has been very involved in that. And I have to say both the PRA and the FCA have done a good job, and the Bank of England, in making sure that we're all in good shape if there is an outcome, which we don't expect at the moment. The interesting thing is that the towns and cities across the UK have been leaning into Brexit and encouraging more investment in their respective communities, and a lot more constructive collaboration has gone on in towns and cities right across the UK. Glasgow, Edinburgh, Newcastle, Leeds, Manchester, Birmingham, Bristol, Bath are all, we're seeing that everywhere. Oxford and Cambridge are prime examples where there's huge opportunities for future growth.
And I noticed that Legal & General Capital recently made some investments in electric vehicle infrastructure. We've been talking about this a lot recently. Nigel, what kind of opportunities do you see for infrastructure investment then in the UK, in electric vehicles or in other parts?
Yeah, it's part of our Future Cities programme. You know, we know that electric vehicles are going to play a very important role going forward. We've already started including those charges in our houses, our offices, and our retail developments. And it's just a natural evolution of the market. And we want to invest in relevant things that are going to help drive both economic growth, but lead to better societal outcomes. And this is just one of many examples that we have across Legal & General of modernising the business by investing in future economic growth. We're not huge fans of share buybacks. We'd rather companies like ours invested for long-term growth.
You know, speaking of long-term growth, we're not seeing a lot of that here in Europe right now, and I'm going to head over to Frankfurt and the ECB tomorrow. Nigel, on the one hand, you want economic growth. On the other hand, low rates are bad for insurers. What do you want from Mario Draghi?
No, I think low rates have proved, you know, we've had low rates for a very long period of time. We've had double-digit growth in operating profit, EPS and DPS with a 20% ROE. So our performance has been pretty good in a low interest rate environment, which is, you know, we've created this incredible backdrop. We've got a huge infrastructure deficit. I think that people like Draghi should start talking about the real economy and actually stop worrying just about the financial economy. The banks are in good shape. Firms like ours are in fantastic shape. What we need to be doing is having investment-led growth. Europe's fallen too far behind the United States and Asia. Very exciting things are going on in Asia. America's got much stronger growth. Europe has to respond by investing for growth, and we haven't seen that. We haven't seen that anywhere in the last few years in Europe. People, politicians, businesses and community leaders all need to step up, work together and figure out how can we compete on a global level by investing more in our economies, in our people, in physical assets and in digital assets.